In section 16.2, we're going to learn how to record closing entries, and we're going to have 4 of them that we're going to learn how to close for a corporation. So the first type of closing entry we're going to prepare is any account with a credit balance listed on our income statement. And we're going to have 3 accounts with credit balances. We have sales with a credit balance, we have purchase discount with a credit balance, and purchase returns and allowance with a credit balance. Again, you're looking at the income statement on the worksheet. In order to bring these accounts to 0, we have to do the opposite, which would be to debit the accounts. So they all have normal credit balances. To bring them to 0, we debit them. So if we see the example here, we are going to list the 3 account titles, the 3 names, the sales, purchase discount, and purchase return and allowance, and whatever amount is in the credit column, we're going to debit that so that it reduces to 0. That way, when we start the next fiscal period, all the accounts are start at 0 to begin the next year. Once we have those 3 debit amounts, then it's like dumping them or closing them into the account, the temporary account called income summary. So we add these 3 numbers together to get our credit amount, because we know that every entry has to have equal debit and credits. So these 3 added together will equal the income summary credit amount. So if we go into our Applia problem, here is our instructions. The first, we are in Discount Books Incorporated, and the first instruction is to record the closing entries on page 19 of the General Journal. Step A, close the income statement accounts with credit balances. So once again, we're looking at the income statement column. Scroll all the way down. Even though income summary shows a credit balance, we ignore that because income summary does not have a normal debit or credit. So we ignore that one, and we go down to our sales amount, our purchases discount, and our purchase returns and allowance. Those are the 3 credits that we're going to reduce to 0. So the information in our closing entry is coming from that portion of the worksheet. If I can move it out of the way, we can see what our entry will look like. So here's our General Journal, page 19. We titled the section Closing Entries. There's nothing to put in the debit or credit column since that's our title. December 31st, we have our 3 debits. Again, we are reducing them to 0, so we have to debit it for that amount. We add these amounts together, and we credit the income summary for that amount. Closing entry number 2 will involve all of the income statement accounts with debit balances, and there's going to be a lot of them. So if you look at your worksheet, in the income statement, we start with usually sales discount with the debit amounts, followed by sales returns and allowances, purchases, and so forth, anything that's in the debit column. In order to reduce those to 0, we have to credit them so that they start fresh for the next fiscal year. So what we're going to be doing for this particular entry here is we are starting with income summary, and actually I'm going to close this and go to our Applia problem. So we're on B, close the income statement accounts with debit balances. So if you look at our income statement, we have a lot of all of these accounts that have debit balances, all the way that starts from sales discount all the way down to the federal income tax expense, everything in this column. So each and every one of these has to be credited in order to bring it to 0. So when we look at our Applia problem, we put the date in 31st, and we're just going to place this title in there, income summary. We're not going to know this amount yet, because what we have to do is all of our normal debit accounts in our income summary have to be credited. So all of these accounts are going to be credited, so they reduce to 0, all the way from sales discount in this case, all the way down to federal income tax expense. Each one is taken right from the income statement on the worksheet, and then once you get them all in, we have to add all of those numbers and debit the income summary for that total amount, so that our debit equals all of our credits. So that second closing entry is going to involve a little bit of adding and making sure that you have all of the accounts listed in the credit section so that they'll be reduced to zero. Our third closing entry is going to involve our net income. So it's to record the net income. It's a shorter one, so we're going to use the accounts income summary and retained earnings because our net income increases our retained earnings for the company, and where you're going to find the information is on the income and the net income after federal income taxes on your worksheet. So if we go into our Aplia problem again, and we are looking at the bottom of our worksheet, it says net income after federal income tax. So this amount, the $73,283.19, is our net income that we have to put into our retained earnings. So we'll close the instructions and show you the third one. We're going to be debiting our income summary account for that amount, that's the net income, and crediting retained earnings, because that's going to increase the earnings that our company is retaining. So this number right here, once again, came from your net income at the bottom of your worksheet right here. You're just taking that same number. Our fourth and final closing entry is going to involve dividends. So I'll just read this paragraph to make sure you understand. It says, because dividends decrease the earnings retained by a corporation, the dividends account is closed to retained earnings. In other words, we are paying our stockholders a dividend, so it's reducing the amount that we're retaining in our company. After the closing entry for the dividends accounts is posted, dividends will have a zero balance. So the entry will look like this. It'll have the date, retained earnings will be our debit, and dividends will be our credit. But where are we going to get that number? If we go back into our Aplia problem, you are looking at your dividends amount on your balance sheet. So this dividends amount, that's the debit right here, is the number we're going to use, so $16,000. So if we look at our final entry here on our general journal, we put the date, we debit retained earnings because it's reducing the retained earnings by paying out our dividends, and we credit that dividends amount to close that out. Remember, on our worksheet, we can pull up our instructions again, dividends is debited for $16,000. In order to bring that to zero, we have to credit it. So that makes sense here. We are crediting the dividends and we're dumping it into the retained earnings, which is really reducing our retained earnings. So the completed worksheet, our completed general journal has our 4 closing entries, the accounts to close out the balances have normal credit balances, all of the normal debit balances on our income statement. This third one was, we found this on our net income, and our last one is the closing out the dividends. So it's not difficult, you just have to concentrate on what you're doing and take your time filling this out. Go ahead and finish the 16-2 work together and move on to the 16-2 on your own.